Hey there, everyone. Welcome to today's Monday edition of The Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a cold and rainy Seattle day here in Redmond, Washington. Thanks for joining us every weekday after the close as we break down the market action using the best practices of technical analysis. Now, when you look at the markets today, if you've been looking at the markets in recent weeks, you've probably observed the overbought conditions that have plagued the equity space, and not just equities. If you look at gold, if you look at cryptocurrencies, if you look at most assets, I feel like right now they're either nearing the overbought region, they are in the overbought region, or recently exiting the overbought region, as we would describe a lot of the growth leadership stocks like Microsoft and Apple. So it certainly has that sense that the market has had this incredible run from November into early December. Now we're sort of in a bit of a pullback phase, and the question is, what all pulls back? Where do we pull back to? Is this just an initial drop before we continue to rip to the upside following those seasonal tendencies? We're going to do a live Q&A today, so we have the chat open now. I would encourage you to start getting your questions in now. After we do a market recap, we're going to go to the live chat, take as many questions as we can through the course of the show today. Any of the questions we don't get to, we will throw into the Final Bar mailbag and hope to get to in our next mailbag show, probably the end of this week. Also, thanks again for hanging with us last week. I was sick after Thanksgiving, feeling much better now, so I appreciate your kind words and thoughts and patience as we get back to full strength here at StockCharts TV. With that in mind, let's get to our market recap and look at what happened today in the markets. Now, before we do that, I do want to let you know about a poll we had over the weekend. We asked you, what's your outlook for U.S. stocks over the next 6 months? Very simple and really modeled after the AAII survey, which is a weekly survey of individual investors. We came in at 52% bullish, 25% neutral, 23% bearish. I'll be honest with you, I'm surprised with the number of people that we had responded, which is a number, a pretty decent number. Surprised we actually don't have more bulls given the strength that we've seen in October into November, right? Go from the third week in October to where we're at now. An incredible run. Everything has started to rotate higher. Now all of a sudden, though, it feels like we're at the upper end of that extreme, those overbought conditions that I mentioned. So the 23% of you that are bearish, I'm curious, 6 months from now, that actually takes you into the beginning of what, May of next year? A lot can happen between now and then, of course. But I think the challenge is when you look 6 months out, it's not about overbought conditions. It's not about the flickering ticks one day at a time. This is about bigger picture, broader implications. Thinking about the Fed, what rate hikes, if those are done, which they certainly appear to be, what a potential lowering in rates in the first, second quarter maybe of next year, which is kind of where we're looking out here. So something to think about. And again, it's great to be right with those polls and be on the right side of things. It's more important to think about those potential scenarios. What would happen if the markets are actually lower 6 months from now? What might that path look like? How should you manage risk over that period? That's what I hope you think about when you see those poll questions. Thanks for answering, by the way. And don't forget to follow us on the social medias. Make sure you subscribe to our YouTube channel. You won't miss the next poll. And let's get to the recap, see what happened today. So kind of a down day for stocks here and a defensive day overall is how I would summarize it. But not end of the world negative, just sort of pulling back after a pretty incredible run last month. The S&P down about 0.5%. The NASDAQ composite down 0.8%. Leading the way lower, and the Dow just slightly lower. So you get that sort of familiar pattern we've talked about where if you look at the Dow, the S&P, and the NASDAQ, without looking at the sectors over here, you probably know what types of sectors are doing well. You probably know what types of sectors are struggling given the growth tilt to all of our benchmarks, really, but especially the NASDAQ, to a lesser degree the S&P, and really the Dow, not much of a growth tilt, to be honest with you. Look at the green you see on this front page, though. Mid caps up 0.8%. Small caps up 1.3%. This has been sort of a standard question I've asked pretty much every guest over the last 8 to 12 weeks. What about small caps? I really haven't seen the participation. How big of a deal is that? And I've gotten various answers. Some have told me small caps not participating is a non-issue. I'm thinking particularly in my conversation with Doug Ramsey of Leuthal Group, kind of came to that general assessment. Others have said, it's not the time for small caps. Jeff Hirsch last week, and by the way, if you missed that one, that was last Wednesday. Besides me hacking up a lung as I try to avoid coughing as I'm talking to Jeff, if you listen to what Jeff said, some really great thoughts about the seasonal tendencies in November and particularly in December, and then going into next year. We talked a lot about an election year, which will be 2024, what that potential path might look like. So make sure you check that one out if you missed. That was last Wednesday's episode. But we did talk about small caps and how really it's sort of getting to that time when small caps potentially do start to do quite well. And you're seeing that today as one little moment here. You're seeing a nice rally in small caps recently. The IWM not quite overbought, but very closely. We'll look at that chart here in a minute if we have time. So something to watch as well. The VIX still very, very low relative to previous levels. We were down in the 12 range at the end of last week, down at a 12 handle on Friday. We're back above 13 here, but again, still very low relative to the historical range that we've observed here over the last 12 months or so. Looking at the bond markets, a lot of green as the entire yield curve basically shifted higher today. And that's the opposite of what we saw last week. We saw rates coming down here, the 10-year yield down in the 4.2 range, 4.25, a far cry from the 5% that we were observing not too long ago. Bouncing back higher just slightly here. So the 10-year yield finishing the day just below 4.3%. The long bond yield around 4.44, we'll call it. Bond prices, of course, coming down when yields are going higher. And the dollar index up by about 0.5% today. Looking at commodities, a lot of red. And this is sort of I'm going to call this the I guess not pattern, which is something I just made up about 20 minutes ago as I was reviewing some of the charts to prepare for the show. Gold on Friday just looks incredibly strong, right? I mean, just pushing higher. And one of the things we talked about, I know with my premium members at Market Misbehavior, was a run like that in gold is pretty impressive. Hopefully you're part of that rally and you recognize the emerging strength that happened to lead up to that rally. But overbought, right? And when something is overbought, that just tells you we're probably at the later stages of the rally, not the beginning of the rally. So you'd expect at least some sort of pullback. Now, the pullback was sudden. You see all the precious metals, even other metals, down pretty significantly today. Gold, the GLD, was down 2.2%. Silver down almost 4%. Copper prices down 2.25%. Even crude oil down just over 1%. Natural gas as well. So precious metals, I would argue, still pretty impressive, right? And if you look at gold testing all-time highs, around $2,100 an ounce, but certainly coming off of that overbought region, pulling back from that retest of resistance. And again, I would be more surprised if that did not happen than if it did happen, but certainly something to watch tactically to chart that pullback. Bitcoin up 4.5%. Now, Bitcoin is up near that 42,000 level. Over the weekend, we've seen continued strength in the crypto space, particularly with Bitcoin. We've had some great conversations recently with Adrian Zadunchik, with Jeff Hirsch. We talked a little bit about the Bitcoin seasonal tendencies that they had been tracking and so on. You're seeing further upside today, coming off of a little bit of weakness Sunday into Monday, but still well above 40,000. Back of the envelope, I think Bitcoin holding 40,000 is a pretty constructive chart. Breaking that, you need to start to reassess, but overall, cryptocurrency is in a position of strength, it appears. Looking at the sectors, it was really some defensive stuff at the top of the list. Things shuffled around, but earlier in the day, utilities, one of the top 3 sectors. And anytime that happens, just sort of tells me, tap the brakes on the optimism type of move. And again, one day only, but let's see if that sort of sector returns starts to materialize over time. Real estate up 0.6% today in today's session. Healthcare number 2, industrials, consumer staples all up about 0.1 to 0.2%. So again, it's just slightly higher from Friday's close. Look at the stuff that was down today, and this shows you why our major benchmarks are struggling. Materials, not so much. I mean, it was down 1.2%, but not a big weight in any of the major benchmarks. Technology and communication services, though, the top 2 sectors, or certainly some of the larger sectors, both down 1 to 1.2%. That's really pulling the NASDAQ and certainly the S&P back to the downside. Let's go to a daily chart of the S&P. As a reminder, we're going to get to the live Q&A a little bit later here after the recap. So if you do have any questions about technical analysis, particular charts, tickers you want us to look at, whatever it is, we're happy to go anywhere. Pop your questions in the chat. We'll get to as many as we can through the course of our live Q&A. Getting back to the daily chart of the S&P 500, testing 4,600, right? Testing resistance. And when I look, I mentioned many times, I think of support and resistance not as absolute levels, but as ranges. So on my daily chart of the S&P 500, I actually show these levels not as specific levels, not as horizontal lines, but more as ranges. The way you do that, by the way, is go to the annotate button and use the rectangle tool. In StockCharts ACP, you have a similar capability if you go to annotations. I like the shapes like this. That was an old Arthur Hill trick that he showed me years ago as a way to just show a range. And what you do is make it a lighter color so you get a little transparent so you can see the details. But if you think about it, I would argue that last Friday's run, and this was Friday's session really pushing up toward 4,600, just barely touching that level. That's really a retest of the July high. So I think that 4,600 level now in play. The question through the month of December, I think, will be, do we have enough momentum to push through that level, or do we take a break? Now, what happened was on Friday's session, we sort of pushed higher. So the end of last month into, or the end of last week, we're sort of in that overbought condition. S&P had a nice up day while the NASDAQ was actually pulling back a bit, but overall overbought as we tested resistance. Now, if you asked any technical analyst what tends to happen when you're overbought and you're testing a key resistance level, I would argue at least 9 out of 10 of those technical analysts will say probably get a bit of a pullback because you're testing a key level and you're already overbought, which means you've already had a really aggressive run to get up to that point. That's what I think we're seeing now with the S&P 500 here. So, a pullback of sorts, I think, makes a ton of sense. If we do get a pullback here in the next week or two, and you're already seeing that pullback, by the way, on charts like Apple and elsewhere. We'll look at those here in a minute. But if you do see a broader decline in our benchmarks, what's great about the SPY, the QQQ, and a lot of our major benchmarks, they have this beautiful gap from early mid-November. That was on that October CPI number that came out, and the market gapped higher from, I think it was a Monday into a Tuesday, if I remember right. And that gap, I think, provides a really clear support level on the way down. So as long as you hold that gap, this is still a pretty decent chart. Even if you sell off this week for some reason, you're holding that level and things are just not getting that bad. And that's why I like to use what I call a line in the sand approach, right? What's that level? What's that sort of area that you're focusing on? And as long as you hold above it, conditions are still okay. In this way of thinking, I would argue the S&P is now innocent until proven guilty. We get below that gap. We get below around 4420. I would say this market all of a sudden very much a question mark in terms of fighting the seasonal tendencies, which tend to be strong in December. Now, a lot of other charts we're going to look at here just to wrap up our market recap. One I want to start with is what we call the new Dow theory, and what we're doing here is just looking at the S&P and the NASDAQ. So it's not just the S&P. This is the S&P 500 here. This is the NASDAQ composite. The QQQ actually did briefly get above its summer high, but the S&P 500, the NASDAQ composite, both have now failed to get above their July high. And so I think, when you think about Dow theory, what Charles Dow was trying to get at by looking at the agreement of different parts of the market, different parts of the economy, was looking for different indexes to confirm one another by both breaking out. If the S&P gets above 4,600, if the NASDAQ composite, gets above 14,400, 500 or so, that would be a bullish confirmed signal, meaning Dow theory says thumbs up, market firing on all cylinders, conditions are positive. If one of them would break out and the other one would not, that would be called a bearish non-confirmation, which is a key part of Charles Dow's toolkit, which would say if one of the indexes broke out and the other one did not, they're not confirming one another, and that should suggest you're skeptical. So I think this chart might be really interesting to see if both of those indexes are able to get to a new high to finish out the year. And if so, that really sets us up for strength going into January and potentially further on through the course of 2024. Now, when I mentioned the extreme conditions that we've observed, I think breadth indicators are a great way to sort of track the overall participation that we've seen with different equities. It's 67%, 2/3 of the S&P members are above their 200-day moving average. The fact that that's above 50%, I think, is pretty encouraging for the medium-term, long-term picture. That tells you conditions are good. The short-term breadth, though, is what concerns me. When we look at the percent of stocks above their 50-day moving average, we're around 85%. I've highlighted with this pink area when we've gotten up to this region before. It usually does not end well. It usually means we're at the end of that rally. It could still be a long-term uptrend, but it suggests we're probably getting a pullback of sorts because the breadth is so positive. If you look at the bullish percent index on the NASDAQ 100, it's overbought right now. The S&P 500 is not quite there, but kind of getting close as well. Now, a couple things to observe here. One would be small caps. You're actually starting to see small caps run very, very quickly. I was wondering, as we were prepping for this show, I saw small caps sort of finishing stronger. I'm like, I wonder if we'd get an RSI above 70 right before we get live, and we indeed did. So by the latest calculation here, the IWM, the Russell 2000 ETF, finally overbought for the first time since mid-July. That was at the July peak. Previous to that, it was in February. It was in August of last year. What is consistent with each of those signals? Those were pretty significant tops for small caps. So again, we have sort of the good and bad, the juxtaposition of strength that we've observed, which feels pretty bullish, and outperformance of small caps, which seems encouraging, but we're now overbought, and we're at similar levels that we've been momentum-wise to previous peaks. And again, that's what makes me just a little bit skeptical about further strength. Now, the real signal is when we get out of that overbought region, and that's what I would look for there. Now, it's not just small caps, right? Here's 3M, an industrial stock, as you probably know, one of the biggest weights in the XLI, the industrial sector, a high-yielding name, by the way, almost 6% dividend yield. Look at how 3M has gone from oversold in early October, oversold again in mid-late October, and that creates what's called a bullish momentum divergence, lower lows in price, higher lows in momentum. This is why we like to highlight those patterns on the show, because they often work out. That's a reversal signal suggesting this downtrend is probably exhausted. It certainly was, as we've now seen a rotation higher. Now, however, 3M is overbought. And this is what's, again, what concerns me, not just the growth names, not just our major benchmarks, other things, 3M, AT&T, a lot of other banks and such are all overbought right now. And again, that on its own is not a bad thing, but it does tell me to start looking for signs of a rotation lower. And that's what I'm on sort of alert for. That's the red flag that has been raised on charts like 3M here. To finish off here, I just want to highlight some of the growthy leadership names. And again, a chart like Microsoft probably tells this story better than others. With 3M, we talked about that bullish momentum divergence, lower lows in price, higher lows in RSI that we observed in October. You have the opposite right now with Microsoft. Higher highs in price through November, lower peaks in momentum mid-November to late November. Now we've rotated lower. Actually, if you look at the candle chart, and if I had ACP, I could just jump to it really quickly, but here we can do it as well. This candle right here, quick quiz, does anyone know what that candle is called? And I'll explain what it is. You have the open and close right at the same level. You have a minimal limited upper shadow and a long lower shadow. This candle pattern, you might call it a hammer candle, and it wouldn't be wrong. I mean, I don't know if I would mark that wrong necessarily, because I guess it is kind of a hammer, but hammer usually has a little bit of a change between the open and the close, so it looks like ahead of the hammer. This one is actually called a dragonfly doji. This is going down your list of candle patterns. I don't know if you got to this page of the book yet, but overall, a dragonfly doji is where the open and close are almost identical. A doji candle is when the open and close are the same, so it creates kind of that cross. Now, a traditional doji, you have the open and close in the same, and then you have the high and the low, and the open and close can be somewhere in that range. If the open and close are at the top, that's called a dragonfly doji. If the open and close are at the bottom, it's called a gravestone doji. So fun names there. But Microsoft, the dragonfly doji, short answer is suggests a short-term bounce here when you get that type of pattern, particularly after a drop. Think about what happened here, right? We opened up around 370. We traded much lower. By the close, we're back up to 370. Maybe a bounce over the next 1 to 3 bars. But overall, again, I think the larger picture with a chart like Microsoft, with a chart like Meta, which has broken above its July and October highs, only to come back and test the 50-day moving average. Didn't quite make it to the overbought region. Charts like Netflix testing resistance from July, overbought, and now coming out of that overbought region. Charts like Netflix down 2.5% today. Charts like NVIDIA, Alphabet, all similar to that look of Netflix, testing resistance and coming back. Again, sort of follows through that pullback from an extreme upward move that we saw in October into November. Again, seasonal strength is the opposite of that, telling you strong through the end of the year. So we'll see how this plays out, but I think further pullback in some of those technology names probably happening. That's our market recap for today. And again, so many charts to go through. Try to hit as many as we could. We're going to get to our live Q&A here in a moment, by the way. So if you have questions, I've already seen some come in there. Please pop them in there over the next minute as we continue on with the live Q&A as well. A couple quick announcements before we start taking your questions. Number one, we would love to hear from you. Fun to do the live Q&As. We appreciate the opportunity to interact with you guys real time, but also the mailbag is always open. Email is a great way still. thefinalbar@stockcharts.com. We've received so many great questions. We'll put all of those into the mailbag, of course. On Twitter/X, you can tag us in a comment at FinalBarSCTV. And on our YouTube channel, don't forget you can drop a comment below the video that you're watching. We'll gather all of those and hope to answer your question in our next mailbag segment when it comes up in the calendar. Also, as a reminder, we have the 2024 Stock Traders Almanacs on sale. I had such a fun conversation with Jeff Hirsch, editor of the Stock Traders Almanac. His father, Yale Hirsch, really created or popularized a lot of the seasonal tendencies that we all kind of take for granted. Sell in May and go away, the Santa Claus rally, all of those things. Yale Hirsch really created that and promoted those widely in the markets, and they've now become market maxims. His son Jeff Hirsch has done a fantastic job keeping that legacy going. I have the Stock Traders Almanac. I've gotten it for every year that I can remember, going back to 2000 when I started the industry. I would encourage you to check it out at our StockCharts bookstore. We have a great sale going on right now. I think Almanac 30 is a code you can use to get 30% off the order. So make sure you check it out on the StockCharts store. Let's continue on, folks, and go to our live Q&A. And again, the Q&A is open. Put your questions in the chat. We'll get to as many as we can. Anything we don't get to, we'll throw it in the mailbag, and let's get to question number 1. Here we go. Chris, I told you no Bengals, actually no Buckeyes or Browns. I'm not a Bengals fan. I am a Browns fan, and those are sort of like oil and water. We don't mix. We sort of argue about that in the state of Ohio. But yeah, tough weekend on many levels. But the Browns again struggling, and the Buckeyes. Let's get to the next question. Duolingo, if you're thinking about short, what confirmation do you need as there is an RSI bearish divergence, MACD is turning negative, but it has a slight double top breakout 3-year chart? We'll go for it. So Duolingo right here, you said a 3-year chart, so I'll try to recreate what you're asking about. Let's see, what else did you mention? RSI, yep, we put, you said MACD, so I can pop that on here. And let's see what we can see. All right, so yeah, Duolingo IPO'd right in 2021. This is one of those that, actually pretty decent time to IPO in that it came during a bull market phase. 2022 kind of hit, and any of these types of names that came out during the sort of COVID rally got absolutely crushed soon afterwards. So Duolingo spent a lot of time well below the IPO price. But if you look at what's happened in 2023, we sort of stalled out here at the IPO price. The IPO price was actually here around 100. It gapped higher on that opening day up to around 130 or so. And so we've now pushed above that level, gapped higher here. And anytime there's a big gap, I immediately think of that as an area of support. So before I get to the specific questions that you're asking, I would say with any of these stocks that have had a good run, and you're thinking you might have a pullback to play, if you're playing it as a swing trader and playing short-term weakness, or if you're on the long side and just trying to protect against downside weakness, I think gaps like this are a really good way to do it. What's interesting about the chart of Duolingo is if you look at the peak in October, it's kind of right in that gap. So this sort of area right around 180, probably the level, and that's the 50-day moving average as well. So if you would get a drop in Duolingo for whatever reason, I would immediately be looking there as a potential area of support. The problem is at 220 down to 180, that's a 40 point, that's almost a 20% drop, 15-20% drop getting down to that area. So that would hurt. Don't get me wrong, and I probably would put a tighter stop than that, but as a, thinking of the medium term, long term, I would say that the stock could remain above that level, above that gap, and still be a pretty good long-term chart, right? We hold the 50-day, that's still pretty good. We hold that gap, it's still pretty good. The problem for Duolingo and many others, if they've run so much in the month of November, they have a lot of downside exposure to get back to that level of support. And that's just the nature of stocks when they've had a run like that. You mentioned the MACD, and I would say that's, again, a lot of stocks like this are starting to show a sell signal, particularly ones that have become overbought. And Duolingo actually became overbought here in early November, once again in late November. And you can see the MACD indicator actually dropping and giving a sell signal really over the last week. So I would argue, given the overall market conditions, given the growth leadership that I think is starting to pull back and probably isn't done yet, charts like Duolingo, I have a lot of trouble chasing a name like this right now. So even though the medium term, long term, I would say a chart like this is actually pretty good, even if it loses quite a bit because it could remain above that level. I would think, and again, not to recommend, but I would be thinking more on the short side versus the long side, given the overbought conditions, given the sell signals that we're seeing on some of these. But I would not be surprised if this pulls back and sets you up for a nice run back to the next side. Remember, an uptrend is a pattern of higher highs and higher lows. You can come down quite a bit and still make a higher low. So I'd be looking down around that gap, around the 50-day moving average as a potential area of a downside objective maybe as well. Great question, by the way. Thanks for bringing up Duolingo. It covers so many bases of the types of charts we've been talking about. It's also interesting to look at some of these IPO names from 2021. Had a strong end of the year after the IPO, struggled quite a bit as the market tanked, but then 2023 an opportunity to sort of re-exert. And while other emerging technologies have not done particularly well and have not recovered their COVID losses, Duolingo managing to do so. Great question. Next one on, let's see, can you give your opinion on how Walgreens stock is going? Absolutely. Whoops, hold on. WBA, sorry. It's hard to keep up with all of these mergers and stuff. And that was just I just mentally went back to, I think, the old Walmart ticker that was, or old Walgreens ticker. So sorry about that. Let's look at Walgreens Boots Alliance here, WBA. So, WBA is an interesting example of one of those charts that's been in a consistent downtrend. And to be honest with you, those types of charts tend to be concentrated in a couple sectors. Consumer staple. If you asked me, pick a random chart in a good, in a long-term downtrend, I would immediately start going through consumer staples because that's where a lot of these have been. And you've had some random names that have done better than average, like some of the grocery stores maybe, and some others. But on average, the charts have looked pretty bad. Now, again, think about the characteristics of what makes this a downtrend, and it's the fact that, again, price has been going down, right, over time, lower highs and lower lows. One of my favorite tricks, by the way, just to digress a moment, we have this selection right here, which basically tells you how opaque to translucent, transparent you're going to make the chart. Get rid of the price. So what I basically did was I want to make the price zero, a level. So it's basically taking the price out. Just look at the shape of the moving averages, and without seeing the daily movements in the price, this is a stock that has been in a well-established downtrend. And I know that because the 50 and 200-day moving averages are sloping downwards. The 50-day is below the 200-day. Both of them are look, the 200-day has not been sloping up at all for the last 2 years. That tells you pretty much all you need to know about the trend in Walgreens Boots Alliance. Having established that, what can we say about the trend now? So what's interesting is we've actually stopped going down, right? So the most bearish thing a chart can do is go lower, right? And when you have a stock that's making new 52-week lows, that's why that's a chart that I tend to avoid. We would always say never confuse the bottom of the page with support. Just because a stock is at its lows doesn't mean it can't go much lower. And when it breaks below its previous support level, when it makes a new 52-week low, that is a bucket of stocks I often just avoid without even thinking again about it, because I would much rather wait for there to be signs of accumulation. So have we seen enough signs of accumulation on a chart like WBA? I would argue not yet, right? We've established that it's not going down, right? This level around 20 has actually held quite well. Now it is a higher yielding name, so I'm going to take an unadjusted data feed, which basically means you put the underscore just below the ticker. That's basically going to take the dividend adjustments out. So I'm just looking at the price action. You can see 20 is where we've arrived here, but even when we take that out, you can see we're actually still just kind of generally declining. We're below the downward sloping 50-day moving average. And look at the rallies in October, in November, a number of times. We keep failing at a declining 50-day moving average. I would get excited about a chart when it stops doing that, right? When you stop failing to hold the 50-day. So this is the type of thing I would set an alert and say, tell me when Walgreens gets above the 50-day moving average, then and only then do I revisit it, because that would probably mean there's been enough upward momentum, enough buying power, enough, a lack of selling pressure that is actually causing accumulation to be had. The other thing you can do is do an indicator like MACD or something like that, which we looked at on the previous chart as well. Look for some sort of buy signal. And again, you had one here in September, really didn't play out very well. And again, I'm keep coming back to this declining 50-day moving average. I would go up here, set an alert, and say, when this gets above the 50-day, then I'll revisit it. That's a good bucket of stocks to look at. Stocks in a downtrend, now finally regaining their 50-day, something to use on the scan engine as well. Great question. Thanks for asking about that. Great illustration of a stock in a downtrend, what to look for an improvement. I am a big fan of waiting for the evidence to show a rotation. I don't think we're seeing that yet. Michael says, thanks for doing the show. I really enjoy it. I do too. It was rough being sick last week. I really enjoy doing the show every day, I'll be honest with you. So it had me off a little bit because this helps me stay connected with the market very well as well. All right. Hi, David. Can you give your thoughts on FTNT CCI indication of reversal? I will try to follow, I think, what you're asking here. So this is Fortnet, which is a software company. I think you're talking about the commodity channel index. So I will drop this on here as well. And if you're not familiar with the CCI, if you're familiar with RSI, it's very, very similar, right? There are a number of indicators that are all what I would argue, or I would describe as momentum indicators or oscillators. Things would be the RSI, which Wells Wilder created, the Commodity Channel Index, CCI, Williams percent R was Larry Williams' version of that. What else is in that bucket? There are others that I'll probably think of after the show. Stochastics, maybe you could lightly generalize as one of those. And all these are trying to do is basically standardize the movements. If you know statistics, kind of like taking a Z-score for the price action and just kind of normalizing the movements and just trying to identify extreme movements to the upside or the downside. What do we see here? So what you've seen with the commodity chain analytics, so this is RSI, the first panel below the price. At the bottom is the commodity chain analytics. You'll see it looks very similar to RSI, just a little noisier. The settings, the calculations are a little bit different, but in essence, it's trying to capture the same kind of things. The commodity chain analytics in general tends to be a little noisier, meaning it's a little more optimized for a swing trading time frame. So if you compare like a 3-bar or 5-bar RSI to the commodity chain analytics, it'll look a lot more similar. I can actually do that for you really quick, and you'll see what I mean. So again, they're not the same. It's probably too much. They're not the same calculation, but they're in the same kind of general family. So if you change the settings here, right? So I made a 5-day RSI. You can see it's a little more similar to the signals that you're getting from the commodity chain analytics. This is really meant for swing trading commodity prices. So to get to your question, is this signaling a reversal? So it is in the essence of the CCI, the commodity chain analytics. You're looking when something's beaten down below the oversold reading, which on the commodity chain analytics is below -100. The overbought would be above +100. You can see the shaded areas. So that right there, when you become oversold and then come out of that oversold region, tells you it's a swing buy, similar to the 5-day RSI with a move above 30, telling you a swing buy off of the lows. And I think that matches up well with this particular bar. If you look at what happened with FTNT, it opened down here around 44 on this gap, but by the close, it was back above $50 a share. So not surprising that the price has gone up after that. It's a great way of thinking of a gap. When you gap down, this shows you how much buyers are coming in, thrilled to buy this software stock after gapping down from 58 to 44, pushing the price almost hammering, almost closing the gap halfway from the previous day's close. So we've seen further upside from there. What's happened, though, is if you look at the 5-day RSI, we're actually seeing the opposite, right? You have this bearish engulfing pattern a couple days ago. That looks like it was last Wednesday or Thursday session. And then you see we've pulled back a little bit from there. So what do you do from now? I think if you miss this rally off of the lows, again, as a trend follower, I'm much less trying to capture these swings. I'm much more looking for a broader rotation, which means I'm looking for a higher low. And I'm looking for a break above the 50-day. We've been below the 50-day moving average really since the gap lower in August. This gap in November was another sort of continuation gap, you might call it, sort of continuing that downside. But overall, getting above there would be meaningful. That would also completely close the gap up here to around 56 or so. If you think of that October low, right? So if we can get above that level, I think that completes the rotation higher. A higher low and a move above there would be pretty meaningful. Overall, that's how I would interpret Fortnet. Again, CCI is an interesting indicator. If you're more of a swing trader, an interesting one to look at. And if you don't understand that indicator or others, great way to learn is click on the magnifying glass, type the indicator. That'll take you to our chart school pages where we explain the indicators, give you the formulas, and show you some good examples that illustrate how to use them. Next question, Westrock. Now I'm doubting my ability to bring up tickers. There we go, I got one. Westrock, WRK, which is a material stocks in the containers and packaging subgroup. So, if you look at some of these previous names, you've asked me about some stocks that are in established downtrends. And again, I'm sort of biased to more growthy charts, right? So as a trend follower, I'm patient. I'd much rather wait for signs of accumulation, as I call it, right? Showing that the downtrend is exhausted and we're now starting to see a rotation higher. I think the ideal situation for, I forget which chart this was, maybe was this Duolingo that we were looking at? No. Which was the one we were looking at? Walgreens. If you look at WBA, right, this is the one that was testing support. Compare that to the chart of Westrock back here. That's kind of the ideal situation for a WBA, right? It's been in a downtrend below the moving averages. Now we stop making new lows, which is what Westrock did back here in the spring, summer of 2023. But then you have this, right, where we're breaking above the 50-day moving average. We're back above the 200-day. We're testing it from above and finding support. This is where I love looking at charts, right, where it's breaking above resistance. We're testing support and holding. That is a sign of a rotation. So I think the WBA chart is kind of like this, this was back in May, June. That's kind of where WBA is now. And the breakout is what I'm looking for, right, to break to new swing highs. This followed through beautifully. So I would say the way I would interpret the chart of WRK is the same I would interpret a lot of stocks right now. The medium term, long term is still quite strong because we're making higher highs and higher lows. Is this a tactical moment when I would want to take a new position? Probably not, because we're overbought, because we've had a really good run already, and we've really pushed higher going into the end of November. Now, as we beginning of December, more likely than not, you get some sort of pullback here, similar to what we saw in August, similar to what we saw in September. This is the time to be patient and wait for a pullback, and then you sort of buy the short-term weakness. That would be, and again, if you look at Westrock here in October, in mid-November, that's what we call the fat pitch chart. I know we're in the off-season for baseball, but a fat pitch chart is just a pitch right over the plate that you have to take a swing at. It's just a great setup. A long-term uptrend with short-term weakness is what I call a fat pitch chart. Just a great setup showing some short-term weakness, meaning there's been some initial profit taking, but the long-term trend is still positive because we're making higher highs and higher lows. So I would have trouble chasing a name like Westrock today. Would I be interested if we would get some sort of pullback, or arguably when we get some sort of pullback? Absolutely. And you have a gap here recently as an initial area of support. An inclining 50-day moving average, as we're seeing here, is usually a good opportunity as well. That's what I'd be looking for on that particular chart. Acorn, Gravestone Doji, really, really close. Gravestone Doji open and close at the lows, and then the long upper shadow. Dragonfly Doji kind of flipped over, right? So the open and close at the top and the long lower shadow. I give you half credit because it is a doji, just the wrong one, but I still appreciate you. Appreciate the guess for sure. How does TNA look to you? TNA is not a name I bring up very much. That is why, okay, I was going to say, this sounds like an ETF that I would probably be bringing up. All right, the Direction Daily Small Cap Triple Bull shares. So, I've talked about leveraged ETF. We don't bring them up a lot on the show, and here's why. When you're looking at something like TNA, I would much rather personally look at the small cap chart, look at IWM or some Russell 2000 ETF or index, look at the underlying index. Think of something like TNA or SH or SDS or SQQQ or TQQQ, any of those leveraged or inverse ETFs as a way to express your investment thesis on the underlying security. My recommendation is start with the underlying thing, right? What are you trying to analyze? If you're trying to analyze small caps, look at the chart of small caps just on its own. Then if you think this is a bearish chart or a bullish chart, think of those leveraged inverse ETFs and other vehicles just like you would use options, right? What are the ways that I can express a bullish theory on small caps? Well, how can I express that bullish thesis in my portfolio? Well, I could just buy small caps. I could just buy the IWM. I could buy a leveraged ETF like the TNA, which would basically juice the upside to amplify upside returns. I could use options, right, and use a naked call option. I could use some sort of some more exotic structure to benefit from the price going higher. But I'm less of a fan of analyzing the chart of the leverage ETF just because there's a lot of kind of artificial exaggeration to these charts because of the leverage positioning. So I will tell you this. I mean, if I'm looking at the chart of the TNA, it's not to be a broken record, but it's right at that overbought region. What are the last 3 times we've been at this point? July, February, August. That's going to be a consistent pattern with a lot of these charts. That's what sort of feeds into my thinking that we've probably had a really good run. I think we need a bit of a pullback here. And again, charts like Microsoft tell me that that's kind of happening already. Charts like Netflix tell me that this is happening. I wouldn't be surprised if some other stocks actually do quite well, right? Banks and others that have had a really good run. Industrial stocks, airlines are up a lot of them today. So those can actually have a pretty good movement, even though our benchmarks pull back. And so I think that's something to think about. Now, a broader way of thinking, and again, that's sort of the tactical issue. But if you do get a pullback in small caps, having something like this as a way to benefit from a recovery in the small cap space, that I would be a fan of, because I would say small caps have been underperforming for quite some time. The sectors that are really rotating a position of strength are the ones that are more, you get more exposure there in the small cap indexes than you would in large cap indexes, because you're no longer have that overweight of technology, communication services. Those are more normal percentages in the small cap space. It's more financials, industrials, energy types of names that have exposure there. Those are some of the sectors that have been beaten down. They're actually starting to rally quite well. So again, short term, I think a pullback is imminent given the overbought conditions. It's not often a great idea to buy into an overbought chart, but a pullback to get into a better level makes a ton of sense. Last question, and we'll pick one more here. Can you show on StockCharts how to draw 2 parallel lines to create a trend channel? Winston, thanks so much for asking about that. I don't know if that's my favorite, but whatever. Just for time's sake, I will show you how to do it. So step one, draw a trend line. I'm going to make it blue and thick just so we can see what we're doing. I'm going to draw this trend line here. All right. Now, the way that you create a parallel line on the Mac keyboard is you hit the Command button. The moment I hit the Command button and click on that first line, I can drag a parallel line, and that's how I make a channel. It is such a cool feature, and I use it all the time, to be honest with you. Particularly when you have things like the QQQ with that nice downtrend channel. If you're trying to just show what a parallel channel this might be and whether we're in a consistent uptrend or downtrend, it's a really good way to do it. So one more time, the trick is, and again, forgive me, I'm drawing the lines in a random place. Draw the first line, hold the Command button down, and click and drag to make a parallel line. And you can do that a bunch of times, actually, if you want to do something crazy like that. On the PC keyboard, I think it's the Alt key. I forget what the parallel is, but there is a key you can hit and do the same thing and drop them down there. If you want to know those shortcuts, by the way, on the annotations sort of palette over here, click the question mark and it'll summarize all of those keyboard and mouse shortcuts that you may not know about the annotations engine on StockCharts.com. Guys, thanks so much for the live questions. Great. Went to a number of different places talking about overbought, oversold conditions, different indicators, different stocks, and up and down trends. Well done, and I appreciate it. We got to wrap the show and go to the 3 in 3, 3 charts in 3 minutes that tell the story of this market environment. Here is chart number one. We're going to start with Apple, and again, just to summarize some of the things we talked about today, I would say charts like Apple over the medium term, long term could go quite higher. I am a big believer in the seasonal tendencies, which have played out magnificently in 2023. I think my conversation with Jeff Hirsch last week is a must watch to sort of get his take about the next 12 months, because an election year has a little bit of a different seasonal tendency. But overall, in a pre-election year, which is what we're in 2023, November tends to be quite strong. December actually tends to be quite strong as well. So I would say, pulling back from an overbought condition makes a ton of sense. I'm not surprised to see the QQQ and Apple and Microsoft and Meta and Amazon and Netflix and Alphabet and all those others pulling back from those overbought regions. I would argue this probably sets us up for a higher low that is probably a really good opportunity to ride the seasonal strength into the beginning of next year. Did want to point out, though, chart number two, it's not just the growth leadership. Here's 3M in the industrial sector. Here's KeyBank in the financial sector. Here's IWM, the Russell 2000 ETF. What is the consistent pattern with all three of these? Well, they've all been going up in the last 6 weeks, and all three of them are currently overbought. And again, overbought on its own is not a bad thing. The fact that something's becoming overbought tells you that the trend is really starting to improve. But the difference is when you become overbought, it tells you on the tactical time frame, on that short-term time frame, you probably get a bit of a pullback off of that resistance. So keep an eye on these names that have had really good runs. I wouldn't be surprised if industrials and financials and small caps do quite well going into next year, but I would be even more surprised if we don't get some sort of pullback as we come out of that overbought region, just like we're seeing now with the chart of Apple. Chart number three, gold. Gold gap down here today, the precious metals. We didn't get to this in our market recap, but certainly we've been talking about the strength in gold, the spot gold or the gold future, which is $GOLD on StockCharts, testing all-time highs at $2,100 an ounce, all pulling back today. And again, this makes sense given the fact that we're overbought. The last time we were overbought here in late October, we pulled back to the 200-day moving average before making a new swing high and threatening new all-time highs. The GLD actually made it there on a closing basis. I would say this pullback is probably setting up for, again, a nice move higher. What you want to look for on the momentum is, do we go from the overbought region down to an RSI around 40 to 50, which is what we saw in November. That pattern continues, and this is another pullback, most likely within a longer-term uptrend. Folks, that's a wrap for this show. Thank you so much for joining us every weekday after the close for the final bar. Thanks so much for being a part of our live Q&A. Keep your questions coming, and don't forget to like this video, subscribe to our channel while you're here. We would so appreciate it. For Stock Charts in a rainy Redmond, Washington, I'm Dave Keller. Be well, stay safe, have a good night.